So let's talk a little bit about Bitcoin, because a lot of people think that that's where we will end up in terms of a neutral reserve asset, even though we're seeing all the performance really with gold this year. But people do think that Bitcoin should be higher right now. Why do you think it's not?
I don't know. I don't know. I mean, I think it should be higher. And knowing what I know, I'm still buying Bitcoin. I buy gold and Bitcoin every week at these prices. I don't know.
So why
I'm not
aren't we
buying
at like
it.
150 or 200?
I don't know. Bitcoin's kind of a funny thing. As someone who's been in markets for 30 years, like it does nothing for like forever, and then like in 2 weeks, one of my mentors in this business, a great smart guy, brought me along, just amazing. Said to me, he always had a lot of phrases. One of the phrases he always said is like 80% of the moves come in 20% of the time, and I just think, there's enough, the thing I hear most about Bitcoin is, it's just a tech stock. Bitcoin's just a tech stock. And in the short run, I could see that, right? Call up a correlation. And, tech stocks act like death. They've broken some technical stuff and, whatever. I get it. I don't think it's a tech stock. I think that's going to fail. But until it does, I think, short-term traders are going to continue to trade it like a tech stock. NASDAQ's down 2%, Bitcoin's going to be down 3%. NASDAQ's up 2%, Bitcoin's going to be up 3%. But we're quickly getting to a spot where I think it's going to be seen as, it's not a tech stock, it's a neutral reserve asset. And I think events are going to prove that. So, I think that'll ultimately be one of the 20% of the times when we get, 80% of the move.
Yeah, there's a great book called Psychology of Money that I love by Morgan Housel, and he talks about that too with stocks, how a lot of the moves happen in a very short amount of time and you see a lot of volatility. But if you stay invested, if you ignore some of the, the temporary crashes, you'll see that it's up and to the right. And Bitcoin has certainly proven that as well. I see you talk about things like electrical infrastructure equities, but you never really comment on Bitcoin treasury companies or recommend that. And I'm kind of curious, like, what do you think of them and why isn't that maybe something you discuss a little bit more? Do you only focus on spot Bitcoin?
Well, it's two things. Number one, my firm's mandate is I can't recommend individual securities for compliance reasons. That's number one. Number two is I don't have the bandwidth to do it, simply because I don't have the bandwidth to go through earnings reports and financial statements of individual companies, et cetera. And so I don't. And three, for me, I want to be right for the right reason. In other words, right, you can be right for the wrong reason, which is, you own something and because you think something's going to happen and it doesn't happen, but it goes up anyway, right? That's right for the wrong reason. You can be wrong for the right reason, which is you can think something's going to happen. It happens, but you don't own the right asset, or you express it improperly or suboptimally. And then there's right for the right reason, which is you think something's going to happen and it happens and you make a lot of money. And for me, I prefer to take the risk out of being wrong for the right reason. And I'm not saying that owning Bitcoin treasury companies will or will not be that. I'm simply saying that I don't do enough of the background work where it's just like, I want to not grow a brain. I want to keep it simple. I just, most of my gold exposure is in gold. Most of my Bitcoin exposure is in Bitcoin. I'm a investor in a Bitcoin related private equity fund, but most of my exposure is in Bitcoin. So that's why I don't really talk about them from that standpoint. I think that's really the key.
Got it. Yeah, no, I thought it was interesting because you always talk about, gold and gold miners, Bitcoin, electrical infrastructure equities, kind of these like broad genres, but you never say Bitcoin miners or Bitcoin treasury companies. So I had to ask. All right, one of my final questions, what's your best argument to those who want a cash flowing asset? And that's why they're so against Bitcoin. Because I really hear some of that FUD, especially from TradFi. It's like, well, there's no cash flow.
Well, I could go for another hour on this. I'll give you a couple. It shows anyone who says that is showing their Western financial privilege. Um, if you're earning a yield, you are taking risk, right? Your money in the bank earns a deposit yield because in a capitalist society, you are taking risk. You are, as a depositor, a creditor of that bank. You are getting a yield because you are lending them money. Everyone thinks that that's their money in a bank. It's not their money, it's the bank's money. And so, technically, in a capitalist society, money in a bank is a risky asset. You are going to, if the bank fails, you are supposed to lose over $100,000, pre-Great Financial Crisis. And by the way, I knew hedge fund guys, like top hedge fund guys, who were moving their money out of banks to get under the $100,000 limit because they weren't sure anything over it would be compensated. Today, that's $250,000. Technically, if you've got $300,000 in a bank and it fails, you should lose everything over $250,000. That is why you are getting paid a yield on that. The yield on a treasury bond is because governments inflate. And I can pull up any number of charts to show you that treasury bonds have been a terrible. Warren Buffett in 2012 said that long-term treasury bonds should come with a warning label. Long-term bonds, because that's how much inflation was going to have to be. So everyone always tells me, oh, Luke, Warren Buffett owns all these T-bills. Yeah, Warren Buffett owns all these T-bills. Did you ever see what he said about 2012, about long-term bonds? I'm like, no, what did he say? I said, they're trash. They should come with a warning label. Okay, so yield is risk. If you're getting a yield on something, FTX was paying a yield. I'm sorry to sort of kick some wounds for some Bitcoin people, but, staking on FTX, you were getting a yield. How'd that go? Well, what happened to FTX is what's supposed to happen to the banks. It's just you don't have an FDIC behind you. The other thing I would say around zero yield is, NASDAQ really doesn't pay a yield, does it? But doesn't stop people from owning that. But that's a bit of a different thing. They'll say, well, that's a productive business. They're reinvesting the capital. And that's a fair argument. The other argument is and why I say it's really another the Western financial privilege is these people they've never been through a sovereign fiscal crisis, sovereign debt crisis. Like you need to own gold, Bitcoin, something that is going to, because they are, and so it is really. A lot of the people that say that to me are the same types of people, not literally the same people, the same types of people that were like, well, home prices have never fallen nationally. Or, it's a new era in 1999, right? Like a sock puppet on the friggin' Super Bowl. And like, it's a new era. They're going to bankrupt all the old economy companies. Well, they bankrupted some of them, but not really. Not before they all went, so I think it's ultimately about understanding where we are in the long cycle, understanding, people look at, the U.S. through dollar goggles, like, oh, we're America. It's never happened here. Well, technically it did. Like the U.S., the Fed has been running a quasi-fiscal deficit, which is an operating loss, for lack of a better word, basically, right? They're upside down. They're having to print money. The Fed bought a bunch of bonds. Inflation went up. And so they are having to print a bunch of money to pay bank interest on excess reserves to the banks at a low rate, or excuse me, at the new higher rate, while the interest they're receiving from the government on their bond portfolio is very low. That's called a quasi-fiscal deficit. A friend of mine, Jeffrey Falvey, who we're friends, it's funny, we're friends on X. We attended the same investment banking grad school class in Cleveland in 2000. Small world. And yeah, it's crazy. Anyway, he pointed this quasi-fiscal deficit out, and he said, the last American central bank that ran a quasi-fiscal deficit? I said, no. I said, to the Fed? He goes, the Fed has never run one. I said, who was it? He said, the Confederate Central Bank. As they were losing the war. As the Confederate dollar hyperinflated to zero. No, I'm not saying the dollar's going to hyperinflate to zero. But this is what I mean about Western financial privilege. I could go to 100. I wrote a report about it. So my clients would all have some idea what it is. I wrote about it in October of 2022. But if I went to 100 RIAs in America and said, hey, what's a quasi-fiscal deficit? What does it mean when a central bank runs a quasi-fiscal deficit? I would bet you $100,000 that maybe 2 would know.
Agree.
And that's why 98% of RIAs will tell you, well, Bitcoin's still too risky. Gold's still too risky. I had someone at a presentation in the Midwest say to me, all right, like, Luke, I understand what you're saying. This is early 2024. I understand what you're saying about gold. But look, if I buy gold and it goes down 30%, I get fired. If I buy treasuries, long-term treasury, and they go down 30%, I keep my job. By the end of this cycle, those will reverse, right? And so that's why, like, it's still so early for 0% yielding, no yield assets. They don't understand what's happening. That's bottom line. It's a Western financial privilege that, they're going to get an expensive lesson, and that's okay.